Hey everyone, and welcome back. Today we're tackling something that's got everyone in finance buzzing.
Yeah.
Is the US dollar's reign as like the world's top currency actually coming to an end?
It's a big question.
It is a big question, and that's why we're doing a deep dive into de-dollarization. And,
Right.
we got the goods.
We do.
We've got a JP Morgan report and some serious research from State Street.
Buckle up.
Buckle up, because things are about to get really interesting.
It really is a fascinating topic. The idea of the dollar losing its top spot.
Right?
It's a big deal, both in the financial world and for you personally. So we're going to break it all down for you today.
Okay, so first things first.
Yeah.
What exactly is de-dollarization?
It is a significant shift.
It sounds pretty intense.
It is, but it doesn't mean the dollar is going to vanish overnight.
Okay.
De-dollarization really refers to a significant reduction in how much the world uses the U.S. dollar for trade and finance.
Okay.
It's like a gradual rebalancing of power
Yeah.
on the global currency stage. So is this rebalancing actually happening, or is it just hype?
Right.
Let's start with the JP Morgan report.
Okay.
They seem to think the dollar is facing some real challenges. They even highlight a few cracks in the dollar's armor.
They do. They point to some pretty compelling evidence,
Yeah.
especially when it comes to the world of commodities like oil.
Okay.
For example, Russia's been selling oil in other currencies beside the dollar, particularly to countries like in the East and the South.
Why is that such a big deal?
Well, if other major oil producers start doing the same thing,
Yeah.
it could have a ripple effect throughout the global economy.
Right.
Right now, most oil is traded in dollars,
Right.
which keeps the demand for dollars high.
Mm-hmm.
But if that changes, the dollar could weaken.
That makes sense.
Yeah.
So Russia selling oil in other currencies is like the first domino to fall?
It could be. It could be.
Okay.
JP Morgan also points out that central banks, especially in emerging markets, are buying record amounts of gold.
Wow.
It's like they're hedging their bet,
Right.
moving away from putting all their eggs in the dollar basket.
So instead of just holding dollars, they're diversifying into gold.
Exactly. They're looking for alternatives to the dollar just in case. And there's another development that's worth watching.
Okay.
The rise of new payment systems that bypass U.S. banks completely.
Okay.
Have you heard of Project Enbridge?
Vaguely remind me what that is.
So Project Enbridge, it's a system that directly connects banks in Asia and the Middle East.
Okay.
This means transactions can happen without going through the U.S. banking system,
Wow.
which could make them faster and cheaper.
Mm.
And that's a big draw for businesses. So it's a very concrete example of how the dollar's role is being challenged.
Wow. It's mind-blowing to think that something as simple as like how we pay for stuff online could shake up the global financial order.
It is.
And what about China's huge e-commerce market? I
Yeah.
remember the report mentioned that too.
Right. China's e-commerce market is massive.
Yeah.
Close to $6 trillion in 2023.
Well-
And a lot of that happens within China's own digital payment systems,
Right.
which are separate from the dollar-based system.
Right.
So as China's economic influence grows, the dollar could face even more pressure.
It's a lot to take in.
Yes.
All these different factors pushing and pulling on the global financial system.
Right.
But hold on, JP Morgan isn't predicting the dollar's demise anytime soon, right?
That's right.
That-
They acknowledge these challenges,
Yeah.
but they also emphasize that the U.S. has some major advantages that support the dollar.
Like what?
Well, for one, the U.S. financial markets are very deep and liquid.
Mm.
What that means is there's a lot of money flowing
Right.
in the U.S., which makes it easy to invest and borrow.
Right.
This stability attracts investors from around the world and helps keep the dollar strong.
So it's like a safe haven for investors.
Exactly. Plus, the U.S. has a stable political system and a strong rule of law,
Right.
which also gives investors confidence. So JP Morgan argues that any major shift away from the dollar would likely take decades, really, because of these advantages.
So it's more of a slow burn than a sudden collapse.
That's what they're suggesting now. State Street.
Yeah.
They take a slightly different approach.
Okay.
They focus on what actually makes a currency dominant in the first place.
So JP Morgan sees both threats and strengths for the dollar, but State Street takes a slightly different approach, focusing on what truly makes a currency dominant.
Right.
What's their take?
They look at things like the size of a country's economy,
Mm-hmm.
how important it is in global trade,
Okay.
the depth of its financial markets,
Yeah.
whether its currency is easily convertible
Okay.
if other countries use it as a peg
Right.
for their own currencies,
Right.
and how stable its economic policies are.
Right.
So that's their checklist for what makes a currency dominant.
That's quite the list. So where does the dollar stand against those criteria, according to State Street?
They conclude that no other currency really comes close to meeting all those criteria. The euro and the Chinese renminbi are contenders, but they both have their own weaknesses.
I can see how the euro might be seen as a rival, given how big the Eurozone economy is.
Right.
What are some of the hurdles it faces?
State Street points out that the Eurozone doesn't have a truly unified financial system,
Okay.
especially when it comes to government debt. It also lacks the sheer size and activity of the U.S. financial markets.
So even though the euro is widely used, it's not quite ready to take the crown from the dollar.
Not yet, according to State Street.
Okay.
And the Chinese renminbi faces even bigger challenges,
Okay.
while China's economy is huge, and it plays a major role in global trade.
Yeah.
Its capital markets are still relatively closed off from the rest of the world. Plus, the renminbi isn't fully convertible,
Right.
which means it's harder to use for international transactions.
Right.
That really limits its global appeal.
That makes sense. It's like trying to buy something online from another country, but their payment system isn't compatible with yours.
Exactly.
It just makes things more complicated.
Exactly. And there are concerns about the level of government control in China's financial system, which can make some investors hesitant.
So both the euro and the renminbi have a ways to go before they could really challenge the dollar's dominance.
Yeah.
State Street also raises some interesting points about the potential downsides of a world with multiple major currencies, what they call a multipolar system.
Yeah.
What do they say about that?
So they argue that a multipolar system would be less stable and less efficient than having a single dominant currency, especially during times of financial stress. Think of it like this. If you're doing business internationally and dealing with multiple currencies that are constantly fluctuating against each other, it becomes a lot harder to manage your finances and predict your costs.
Right.
It also increases the risk that something could go wrong.
So they're basically saying that having one dominant currency, even with its flaws, has some benefits for the global economy.
Exactly. It simplifies things and reduces risk, which is why they believe there would be a natural pullback toward a single dominant currency, even as other currencies gain ground.
That's fascinating. So we have JP Morgan seeing both opportunities and challenges for the dollar, and State Street highlighting the criteria for currency dominance and the potential downsides of a multipolar system.
Right.
It sounds like both reports acknowledge that changes are happening in the global financial landscape, but they don't think the dollar is going away anytime soon.
That's a good summary.
Okay.
They both agree that the dollar's position is strong for now.
Right.
But they also acknowledge that forces are at play that could lead to a gradual shift in the global financial order.
You mentioned earlier that State Street also has some concerns about what could happen if the dollar weakens.
Yeah.
They specifically mentioned the U.S. Treasury market. That sounds serious.
Yeah.
Can you elaborate on what they see as the potential risks there for me as an investor?
Sure. So they're worried that if the dollar weakens significantly, it could lead to higher interest rates on U.S. government debt. This would make it more expensive for the U.S. government to borrow money.
Right.
Which could have ripple effects throughout the economy.
How would that affect me as an investor?
Well, if you own U.S. Treasury bonds,
Yeah.
a weaker dollar could erode the value of your investment.
Okay.
And if interest rates go up, it could also make it less attractive to invest in U.S. assets in general.
That's a sobering thought. So it sounds like a weakening dollar could have both pros and cons depending on your individual circumstances.
Exactly. It's not a simple issue with a clear-cut answer.
Right.
It really depends on a lot of factors.
Okay, so we've covered a lot of ground here. We've looked at the factors challenging the dollar's dominance, the strengths that still support it, and the potential implications of a weaker dollar. What does this all mean for me personally? If the dollar does decline, how might that affect my everyday life?
That's the key question, isn't it?
Yeah.
We're so used to the dollar being the global currency that it's hard to imagine things being any different.
Right.
But if the dollar weakens, it could have a real impact on your wallet.
In what way?
Think about all the things you buy that are imported from other countries, like electronics, clothes, even food.
Yeah.
If the dollar weakens, those imports become more expensive.
Right.
Which could lead to higher prices for you at the store.
So a weaker dollar could actually fuel inflation.
It's definitely a possibility.
Wow.
On the flip side, a weaker dollar could make U.S. exports more competitive.
Okay.
Which could benefit some American businesses.
So there's a potential upside for U.S. exporters, But for the average consumer, it could mean feeling the pinch at the checkout counter.
That's the trade-off. And when it comes to investments, a decline in the dollar's value could also impact your portfolio.
Okay.
Particularly if you hold assets that are denominated in other currencies.
Can you give me an example?
Sure. Let's say you own stocks in European companies. If the euro strengthens against the dollar, those investments could become more valuable in dollar terms.
Right.
Of course, there are many other factors that influence investment returns.
Right.
But currency fluctuations can play a significant role.
It sounds like navigating this shifting financial landscape could get pretty complex. It's a lot for the average person to keep track of.
It is, and that's why it's essential to stay informed.
Yeah.
And consider diversifying your investments across different currencies and asset classes. Think of it as spreading your risk.
So if I'm worried about the potential impact of a weaker dollar, what are some practical steps I can take to prepare?
One option is to consider investing in foreign currencies or assets that are denominated in foreign currencies.
Okay.
This could help hedge against a decline in the dollar's value.
So like buying euros or Japanese yen?
Exactly. Another strategy is to diversify your investment portfolio.
Right.
Across different asset classes like stocks, bonds, real estate, and commodities that way. Even if one asset class is performing poorly, others might be doing well.
Right.
Which can help buffer your overall returns.
Diversification is always good advice no matter what the economic climate. It's like the financial equivalent of not putting all your eggs in one basket.
Precisely. And it's especially relevant in a world where the global financial landscape is changing so rapidly.
You know, as we've been discussing these reports, it's striking how much emphasis they place on the role of trust and stability in maintaining a currency's dominance.
It's absolutely fundamental.
Yeah.
The reason the dollar has held its position for so long is that for all its flaws, the U.S. is still seen as a relatively stable and predictable place to invest.
Right.
That perception of stability is crucial for maintaining confidence in a currency.
But what if that perception starts to shift? What if investors start to lose confidence in the U.S. political system or the strength of the U.S. economy?
That's the billion-dollar question.
It is.
If that were to happen, it could certainly accelerate the decline of the dollar's dominance.
And the consequences of that could be far-reaching, not just for the U.S., but for the entire global economy.
Absolutely. A decline in the dollar's dominance would have ripple effects throughout the world,
right,
affecting trade, investment, and even geopolitical relationships.
It's almost like we're at a crossroads with the potential for major changes in the global financial order.
We are in uncharted territory in many ways.
Yeah.
The factors driving de-dollarization, like geopolitical tensions, the rise of new technologies, and the shifting balance of economic power are all intensifying.
It feels like we're living through a historical moment, watching the tectonic plates of the global economy shift beneath our feet. It really does feel that way. It makes you wonder what role the dollar will play in this new world order.
That's what makes this whole discussion so captivating, isn't it? It's not just about numbers and economic theories. It's about power dynamics and how the world is changing right before our eyes.
You know, as we've been talking about de-dollarization, it's become clear that it's not just an economic issue. There are huge geopolitical implications as well.
Absolutely. The dollar's dominance has given the U.S. immense political leverage globally. It's allowed the U.S. to impose sanctions, influence trade, and really shape the flow of money around the world.
Right.
Think about it, like having the biggest voice in the room, you tend to get heard.
But if that dominance fades, wouldn't that also diminish U.S. influence on the world stage?
It's a real possibility. A world with multiple major currencies would likely be a more multipolar world, where power is more distributed among different countries. It's like going from a solo act to an ensemble cast.
That could make the world less stable. Wouldn't there be more competition and potential for conflict between major powers?
There's definitely that risk. It's like having more players at the table, each with their own interests and ambitions. But it could also create opportunities for emerging economies to step up and play a bigger role on the global stage. It could lead to a more balanced and equitable international system where power isn't concentrated in just one country.
It's fascinating to think about how these financial trends could actually reshape the geopolitical landscape. It's almost like we're witnessing a power shift in real time.
It is a truly transformative period, and the implications go way beyond finance.
Right.
They touch on everything from global security to international development to the future of technology and innovation. It's all interconnected.
It's a lot to consider, and it makes me wonder what I as an individual can do to navigate this complex and uncertain future. It feels overwhelming sometimes.
I understand that feeling, but the key is to stay informed, stay engaged, and stay open to new possibilities. Yeah. We need to be aware of the forces shaping the world around us and be prepared to adapt to change.
Yeah.
It's like learning a new language. It takes time and effort, but it opens up a whole new world of understanding.
So it's not just about diversifying my investment portfolio, it's about diversifying my perspectives and my understanding of the world, kind of like expanding my horizons.
Exactly. We need to cultivate a global mindset, embrace diversity, and be willing to challenge our own assumptions. It's about being curious and asking questions, even if the answers are complex or uncomfortable.
That's the call to action for all of us to become more informed and engaged global citizens. It's like recognizing that we're all part of something bigger than ourselves.
I think that's a great way to put it. We all have a role to play in shaping the future. And it starts with being informed and being willing to participate in the conversation. It's about being proactive, not passive.
Well said. So to our listeners, we encourage you to continue exploring these issues, to seek out different perspectives, and to engage in thoughtful dialogue about the future of our world. It's about connecting the dots and seeing the bigger picture.
Because the more we understand about the forces shaping our world, the better equipped we'll be to navigate the challenges and seize the opportunities that lie ahead. Knowledge is power, as they say.
Absolutely. And on that note, we'll bring this deep dive into de-dollarization to a close. It's been a fascinating journey.
Thanks for joining us. We hope you found it as thought-provoking as we did. Keep those questions coming.
Until next time, keep diving deep.